Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
What's up, everybody? Anthony Crudele here, and thank you for tuning in for this episode with Tim McCourt. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes, YouTube, Google Podcasts, Spotify, and Stitcher. If you're enjoying the show, please leave a review on iTunes. This show is also sponsored by Trading Technologies, FTSE Russell, and RJO Futures. To learn about some great offers that these sponsors have for our listeners, please visit futuresradioshow.com/sponsors. Today, I spoke with the Managing Director and Global Head of Equity Products and Alternative Investments at CME Group, Tim McCourt. Tim is on the front line when it comes to the development of the Micro E-Mini and Bitcoin futures products. With us just passing the one-year anniversary of the Micros, I wanted to have Tim back on the show to see how well the Micros have done. Tim shares with us the really incredible stats that we are seeing in the use of Micro E-Mini futures across the globe. And with all of that growth that CME is seeing, they have now decided to announce Micro E-Mini options. So Tim shares with us the details of the upcoming launch. Last but not least, we talked about Bitcoin halving and how Bitcoin futures have seen tremendous growth in their daily volume. So without further ado, let me take you right to the interview with Tim. Explain to everybody what it is you do at CME Group.
Sure. So I am Global Head of Equity Index Products and Alternative Investment Products at CME Group. And what that really means is I manage the business line that is responsible for futures and options on futures on all the global equity index benchmarks, as well as the alternatives such as commodity indices and cryptocurrency like our Bitcoin futures and our Bitcoin options on futures that we launched earlier this year. It's all part of my remit and arguably the most exciting products we talk about on your show. For sure.
Yep. No doubt the micros have been the hot topic for the past year. And speaking of just the past year, we just had the one-year anniversary. Talk to us about how well the micros did in their first year.
It's been a tremendous first year for the Micro E-Mini futures. You know, it seems like only yesterday, Anthony, when we were talking about the launch and the run-up to the launch and the excitement, and it's been amazing for CME, for the marketplace, for our customers, and for new entrants into the market as well. You know, since launching a little over a year ago, we've traded over 245 million Micro E-Mini futures contracts across all of the four major indices, being the S&P 500, the NASDAQ 100, the Russell 2000, and the Dow Jones Industrial Average. And it's been amazing. You know, since we look at that equates to over 913,000 contracts per day since launch, and over 1.5 million contracts trading per day in 2020. It's been amazing and certainly has exceeded my wildest expectations for sure. It's been a lot of fun to watch, and I'm excited to see where year two takes us after this.
When I was reading the one-year anniversary stats, what really stuck out to me the most was the amount of countries that were participating in trading the micros, because to me, it told me that there's just growth across the globe with this product. Can you share with us how many different countries and just all different parts of the world that are actively trading the micros?
Yeah, I mean, that's certainly been something amazing to watch as well, where even for well-established contracts, it's always interesting to see how the international adoption will manifest and how it will present itself. But the fact that we've been able to trade in more than 160 countries since launching 1 year ago has been fantastic. And then when we look at the percentage of volume, not even just the geographic distribution, but the percentage of volume in the micros originating outside of the U.S. is also about 27%. which is a little bit above average compared to the equity index complex as a whole. So it's been great to see that it's, the distribution is pretty wide. People are actively trading the contract. And I really just think that speaks to the global international demand for trading the U.S. equity index benchmarks. And this is just another great example of what we can accomplish when we listen to customer demand and design a right product that meets a very specific need in the marketplace.
Has the micros volume hurt or help the bigger E-Mini products?
That's a great question. So I would say there's maybe a two-part answer. Overall, certainly has not hurt. And I actually think it's helped to a small degree. What's interesting is before the volatility spike we saw that started end of February, beginning of March, it was very clear that it was not cannibalizing or kind of eating into the E-Mini flow. And when we look at that, it's really when we look at the average clip size of the trade, as well as the bid-ask spreads, it's very clear that it was complementary. Now, what's interesting is when we moved into the volatility time, it still wasn't harmful to the E-Mini flow. But what we did see some traders actually trade both of the contracts more often. And I think what that speaks to is the smaller right-sized contract is even helpful to those traders who are using the E-Mini when the risk returns to the market in perhaps a violent or kind of very intense fashion that we saw in the last few weeks and months. You can use the smaller size contract to scale up or scale down your position without having to trade an entire E-Mini contract, even if you prefer to trade the E-Mini. You can be a seasoned E-Mini trader, but if you're not sure what's going to happen when the market's moving a few percentage points per day, the micros are certainly complementary and a new risk management tool that you could use to hedge your positions or kind of scale in or out of the market. So we did see that, but I would still say it was complementary. It was in addition to, it was not necessarily a replacement of the E-Mini strategy.
Well, you pretty much explained me, and that explanation is because I'm somebody who's been an active E-Mini S&P trader for many years, and the beginning of March, I started to use the micros for some of my positions because exactly the way you explained it. When the volatility was getting really wide, I'm looking at it going, man, I got to enter into a 20 to 30 point range here. My stop's so wide. You know what? I think I'm going to start using the micros. And what's funny is now that volatility has come down a bit, I've actually now been using the micros for my swing positions and really just added another really level of my trading with the micros. And I know a lot of my trader friends that have been trading for a long time have done that as well. So it's good to hear it from you that it's actually happening across these products. Now, the one thing I'm curious about is, so we know that pretty much the S&P is the big boy, right? When we look at the regular E-Mini, it's probably the most volume. And then I don't know what's second, third, or fourth, maybe NASDAQ, Russell, and Dow. I'm curious for the micro products. Are you seeing the percentages the same? Is the S&P still the most, then maybe the NASDAQ, and then the Russell and the Dow? How does that all unfolded?
That's a great question. So when we look at the 4 micro E-Mini futures contract, there's certainly a more proportionate representation across S&P and NASDAQ, which, Anthony, to your point, is not surprising given we see that characteristic in the E-Mini as well. Where typically there's a little bit of daylight between the NASDAQ and the Dow and the Russell in terms of ADV, with S&P 500 always being the kind of the top spot. What's interesting about the micros is that proportion has shifted a little bit for NASDAQ. And what I mean by that is typically in the E-Minis, let's say about 60% of the volume of the 4 come out on the S&P 500. And maybe NASDAQ is doing, call it 30%, right, plus or minus. And then kind of Dow and Russell split the balance. What's interesting about the micros is S&P micro E-Mini futures contracts are only about 50% of the micro pie, with NASDAQ being about 10 percentage points higher, kind of between that 30 and 40% range, where we've actually seen days where the micro NASDAQ has out-traded the micro S&P. And I think that really speaks to the attractiveness of the NASDAQ complex and stocks that make up the NASDAQ 100 for the active individual trader out there. I mean, the NASDAQ has been, as you know, has been a red-hot trade, I think, the last few years, and certainly the micro makes that trade a little bit more accessible for futures traders. And then we see, micros, the Dow and Russell kind of splitting, equally about the balance. But that's been great to watch. Where I think in aggregate, since the launch, the S&P has done about 120 million contracts, and the Nasdaq Micro has done about 90 million contracts. So they're kind of keeping up with each other, and that's been a great development to see.
It just goes back to what you said about the micros versus the big products, and how when volatility kicked up, you saw more people going to the micros, and the Nasdaq is a more volatile product. So I could really understand and see why a lot of day traders have gone to the micros, because on a day-to-day basis, it's pretty much the most volatile market. And also, even for me, just using my experience, what I'm doing and using the micros as well, is I started to trade, the other products that, like I said, I'm not day trading them is much. I'm using the micros more for swing positions, and they're just really great for that, because if we do get volatility, a lot of day traders can go to the micros and almost use them like options, is kind of what a lot of us have talked about. And speaking of that, I know that you guys recently announced the launch of micro options, and I think it's just for the S&P and the Nasdaq. So talk to us about how that's evolved.
Yeah, that's right. Just last week, we announced that this fall of 2020, we're going to be introducing options on the E-Mini, options on the micro E-Mini S&P 500 and Nasdaq 100 futures, which is kind of, as you said, is the next natural evolution in this E-Mini equity index story. The Nasdaq and S&P are kind of the clear volume leaders of the four. And as we talked about before on this show and elsewhere in the marketplace, to introduce options, you really need a robust underlying futures market first. We've had the market a little over a year now, so we think it makes great sense to introduce options that are also right-sized to increase precision by which market participants can manage their risk, hedge their positions, or access the market using options. So we're very excited about that. And I think this is something where just another example of what we can do when we're trying to innovate and trying to round out the offering in equity indices. I'm super excited to see how the options will do. I can't necessarily say it'll be the same success as the futures, which was the most successful product launch in CME Group history, but certainly going to be a lot of fun as we bring these option products to market over the summer as we head into the fall.
Now, I'm not an options trader, but I'm curious about some of the details of the micro options. I know that there's monthly expirations and weekly expirations in the regular E-Mini products. And that's about really all I know about the options market. But I'm curious as to, is it going to be really exactly the same like the bigger products, or is it going to be a little bit different?
So in terms of the way the product will work, the options will be on one of the micro futures contracts. So that will be the same relationship that the micro E-Mini futures represent as well, where the options will be 1/10 the size of the classic or iconic E-Mini S&P options or E-Mini Nasdaq 100 options at CME. Where it's going to be a little bit different is let's call it the product offering, the market structure around options. As people are familiar with options, there are several maturities offered, as you alluded to, as well as a bunch of strike arrays and strike listings. So what will be a little bit different with the micro options is that offering will be a little bit trimmed down. We're only going to be offering 10 maturities in the listing cycle at once, which will include 5 Friday options, 3 end of months, and 2 quarterlies. There won't be any Mondays or Wednesdays. And of those 5 Fridays, 2 of them will be the 3rd Friday serial or monthly options, and then kind of rotating 3 weeks of Fridays on the week 1, 2, and 4 schedule. And what that does is in response to customer feedback, both from our retail broker partners as well as end users, as well as market makers. And they want to focus the liquidity provision where we think it makes most sense to introduce the product, and that's focusing on the Fridays, quarterlies, and end of month. So that would be the first product listing for the E-Mini Nasdaq 100 futures, and the micro E-Mini Nasdaq 100 futures, options futures, and S&P 500 options on futures. So a little bit trimmed down, but otherwise, for all intents and purposes, just 1/10 the size, but just slightly less maturities when we launch this product in the fall.
And similar to the question that I asked about the micros versus the bigs and the volume, do you think that the market, obviously you're seeing demand, you're hearing demand from clients about getting options on the micros. I'm assuming that you're expecting this to have a similar result with helping the growth or not hurting the existing volume in the regular options.
That's correct. Certainly our expectation, hard to forecast exactly what will happen when we launch the product, but we're expecting and trying to position this as a similar complementary feature to the market, where that smaller right-sized contract will be additive to even those users who are currently using E-Mini options at CME, or if they're actively trading other options in the marketplace, this may be an easier on-ramp for them into the options on future style products. And when we look at it, it's something unique where we've had over 155,000 unique accounts trade the micro E-Mini futures contracts. Just about half of those accounts are kind of new traders to CME. So I'd also think that when we look to introduce options on the micro E-Mini futures, we are certainly trying to position it in a similar fashion where we're attracting other individuals that are already active in the ecosystem. If they're not trading at CME yet, but maybe they're trading ETF options, or maybe some of the smaller size cash index options, this certainly will be a more attractive on-ramp, I think, to all the benefits that options on futures have. So that is all the same story, very similar to the futures mantra that we've been working on over the last 2 years since we've announced and launched the micro E-Mini futures. And certainly going to be excited to see the adoption profile of options. But at this point, that is our expectation, is that we'll be tackling this from a similar vantage point, because it has a lot of the same benefits as the micro E-Mini futures.
Yeah, that makes perfect sense to me, because I even look at myself as somebody who has dabbled in the options markets. As you could tell from my previous comments, I don't know a ton about them, but this is a great product for someone like me who's been trading regular futures for many, many years and really been looking to do more options. But sometimes you look at it and you say, you know what, this might be a little too big of a position to take on the way I want to do it. And this offers even someone like myself who's been doing this a lot of years the ability to step in and use the micro options the way that I've stepped in and started to use the micro. So I could see a lot of traders that are trading, like you said, ETFs or other products, and look at these micro options and say it's a great way to step in and start participating in the futures markets, which obviously we all love to hear more people getting involved in futures. And one product that I've been really seeing a lot of talk about on Twitter over the last couple of months is Bitcoin futures. And really since I started seeing the Bitcoin halving tweets coming out, and this was not something I was really familiar with and not really totally understanding of what it was initially, and then I learned as to what it was, and I realized this is something that's happened actually before and it's planned to happen. If you could real quick explain to everybody what Bitcoin halving is and how, if at all, it's had an impact on CME's Bitcoin futures.
Sure. So when we look at the Bitcoin halving, what that speaks to is the event that is not necessarily on an exact predetermined schedule, but at a certain point in time, the reward for mining Bitcoin and effectively verifying the transaction is reduced, is cut in half. So what that does is that's akin to a supply side shock, right, in the market, where if the reward for mining the Bitcoin, which, as you remember, that's a predetermined, prefixed number. There's only 21 million Bitcoin that will be in existence forever. And right now we think it'll be the last few million will be mined between now and sometime in 2140, so a long ways out. But the reward will continue to half as the number of Bitcoins are mined. So what that does is the mechanics of the Bitcoin market are still, in my opinion, largely driven by supply and demand. So when you have these type of shocks on one side, whether they're demand driven, which we've seen over the last few years, but this one a kind of known, well understood and kind of forecasted supply side shock to the market, is it introduces both trading opportunity as well as people needing to hedge the price of Bitcoin, because we have seen some intense price action around previous halving events and certainly kind of the year following. So a lot of people are just looking to position around the halving, which happened last month, as well as manage their risk, both to their mining operations as well as to their portfolio. So we've actually seen a good amount of trading in the Bitcoin futures at CME, as well as our Bitcoin options that we launched back on January 13th. We just recently had a record day where we traded over 1,400 Bitcoin options last week, where our contract is worth 5 Bitcoin. That's almost, a little more than 7,000 Bitcoin trading in options for a product that's a few months old is fantastic. And then when we look at the futures volume, we're doing just about 9,000 contracts ADV, or average daily volume, here in 2020, which is up, 35% from the end of 2019 and up about 120% year over year through kind of end of Q1, Q2 of 2019. So the Bitcoin complex remains strong at CME. Volumes are growing, participation is growing. It's all been a lot of fun to watch. Certainly some of it was, I think, a result of the halving, but I think also just the result of ongoing adoption of the Bitcoin futures complex at CME as well.
How long has Bitcoin been a future now? Has it been 2 years already, or even longer, right?
Yeah, a little over 2 years, almost 2.5 years. We launched back in December of 2017. So it's been, a little over just about 2.5 years, let's say, for Bitcoin futures. And we're actually fastly approaching on the almost 6 months of Bitcoin options. So time flies when you're having fun.
And for this year, because this is a year I look at Bitcoin and say, man, you know what? This is the year they kind of have to rally with everything that's going on and what Bitcoin represents. I remember when Bitcoin first came out, and we kind of are been watching this timeline, and I say everything that's going on in the world right now. To me, this should be a really hot year for Bitcoin. So, as of 2020, is this the biggest surge that we've seen in volume and participation in Bitcoin, more than what you've seen over the past 2 years?
Oh, that's a good question. I don't know off the top of my head. I think certainly the growth has continued, but I think in terms of like the growth rate, it's certainly up there. But I think even if we go back to the summer of 2019, I think we saw some growth volume. I think in general, what we've noticed is as the price tends to move upwards into the 10,000 range, that seems to be a watershed level, so to speak. I think when we see an increase in trading, an increase in hedging. So I think this has certainly been a good uptake in volume. I think the last one that we saw that was very similar was, again, when the Bitcoin price went north of 10,000, I think all the way almost up to 13,000. So I think it's a function of price and events. But I think what's more interesting to watch is when we look at the growth pattern at CME, we also just had a record number of large open interest holders in Bitcoin futures at 71 large open interest holders. So I think what's more encouraging to see is not only the volume growth, but open interest is continuing to grow. We have just about 15,000 contracts of open interest across the futures and options. So everything on a growth perspective in terms of open interest, people holding positions, people managing their positions, that's growing along with volume the last few months, which I think is an encouraging sign for the months ahead.
Yeah, it makes perfect sense because as the price goes up, futures are doing what they're supposed to do. They're helping these miners and people that own a lot of the spot hedge.
That's right. I think that's the thing where the one thing that we like about our Bitcoin complex at CME is even though it's financially settled, it does settle to the Bitcoin reference rate, which is the once-a-day fixing on 5 of the largest spot exchanges where we have Bitstamp, 8bit, Coinbase, Kraken, and Gemini. So I think the fact that it's also closely tracking the spot market, but financially settled, is also what makes it easy for institutions to get involved, as well as traders. It's been something that we really enjoyed seeing not only our market develop, but the Bitcoin reference rate develop. And I think as time goes on, we'll continue to see increased adoption and more institutions and trading firms get involved in Bitcoin futures and options at CME.
Exciting time for futures, Tim. Thank you so much for joining me today. I know people will probably have a lot of follow-up questions for a lot of things that we talked about. Could you share with us some links that people could go and follow along with the updates and the micro options, or any other links that you'd like to share with us about what we talked about today?
Sure. So I think a few useful links for the listeners to go to for the micro futures would be cmegroup.com/micro E-Mini. And then for options, it's cmegroup.com/micro E-Mini options. And then anyone who has questions about Bitcoin or the Bitcoin reference rate can go to cmegroup.com/Bitcoin.
Where can people follow you and CME on Twitter?
So they can always go to @CME Group for the corporate Twitter handle. And then anyone who's interested, @Tim McCourt, CME. And I think Twitter is certainly something that we look to when we follow around the micro as well as Bitcoin. So it's always a great place to stay connected, find information, or reach out if you need anything from myself or the team here at CME. We're always happy to help.
Yeah, Tim, I can't thank you enough. You've answered many of my questions, and I know a lot of the listeners out there have reached out to you on social media, and you've gotten all their questions, so we all really appreciate that. And thank you so much for taking the time to speak with me today. It's always a pleasure to speak with you and have you on Futures Radio Show.
My pleasure, Anthony. Always good to catch up.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.